Hello, this is Corner Invest. Today I'll be talking about a stock that I recently just bought, Google's antitrust lawsuit, the stock market outlook in general, as well as some cheap stocks to buy in this stock market today. So let's talk about the stock that I recently just bought. This company is none other than United Health. So United Health, their earnings came out and then the stock plunged around 22% in a single trading day. And this is the largest fall in around 26 years. So why exactly did United Health basically fall? It was because of their earnings. So the earnings was in general, it came in line. It missed estimates by around 1%, and then the revenue also missed estimates by around 2 to 3%. But the problem with their earnings was their guidance. So they lowered their guidance by around 12% from the previous guidance that they gave out, and that is why the stock is plunging. So for United Health over here, yeah, the management basically cited that it was due to increased Medicare Advantage costs, which led to the MLR increasing much higher than expected. And they also stated that some Optum Health members they had unanticipated changes, and that is why they're lowering their guidance. So over here, United Health grew to serve more people more comprehensively, but did not perform up to our expectations. And we are aggressively addressing those challenges to position us well for the futures ahead. So for United Health over here, why did I buy into this company is because of a few things. So another company, Elevance Health, they recently just gave out a statement. They've said that the cost have come in line with their expectation and they will be basically beating their earnings guidance, and they just released that around a few hours ago. And another thesis that I have is United Health is experiencing much higher costs than expected because Trump was getting elected. So Trump, before his inauguration, he has stated his dislike of the costs that is being put into Medicare, and everyone was scared that maybe Medicare would basically be cut out of the government's budget. And when that happens, then your healthcare insurance, they won't be able to cover your Medicare portion already. So United Health could be seeing some sort of like one-off event where people are claiming more than expected because they were trying to front run Trump's Medicare sort of like elimination. And another portion could be the murder of their CEO as well. So United Health Group, the portion of the insurance business, the CEO Brian Thompson was murdered a few months ago, and that could have led to some sort of backlash where people basically went to the clinics more often and not just to punish United Health. So for United Health over here, I have a few theses. So number one, the event over here could be a one-off event, and that is causing earnings to be much lower than expected because you're not seeing other companies like Elevance Health experiencing this as well. And yeah, overall, I think United Health is a quality business. And if you're to just look at the history of this company, if it's not in the insurance industry, you have thought that this company is a high quality compounding machine. Look at the fundamentals of this company. Revenue growth has been stable all these years. Net income growth has been stable all these years. This year was a drop because they had a cybersecurity issue, which led to some sort of like data breach, and then they had to pay a fine and they had to divest some businesses as well. And yeah, overall, this business is a stable quality compounder if it wasn't in the insurance industry. But the problem with this business is it is in the insurance industry, which is highly regulated, and that is what I dislike about this company as well. That's why I only deployed a very small percentage of my portfolio into United Health today. It is not a very large position. It's more of like a starter position that I have for this stock, simply because of its fundamentals. So for United Health, they have cited that Medicare is causing higher costs than expected, and the government have addressed this as well. They have increased the Medicare payouts for 2026. So I think this Medicare cost issue could be just a transitory issue. It wouldn't be a very long-term one because the government is already doing so to try and improve the situation for all these different insurance companies. So there are some bad theses for insurance companies like United Health, which is that regulation could come into play, but I don't think Trump has time for that. Trump is more involved in all his different tariff work. I don't think he will be involved in trying to stop insurance companies from insuring people. And insurance is one of the most fundamental things to people's health in the United States because the healthcare system in the United States is extremely broken. Without all these insurance companies, all the people there won't be able to afford healthcare. And that is why you're seeing all these different healthcare companies, all these different healthcare insurance companies prospering and doing much better than all your different other tech companies and so on. So I view this situation as transitory. I don't think it is a permanent issue, and I don't think it's anything structurally wrong with this business. And every time they met a small problem, they have overcame it. And I think the management over here, it's a great management. I've listened to their earnings call. I've looked at their earnings call as well. I think the management is sound. I think the management is quality, and they have their shareholders and their patients in mind. So for United Health over here, the valuation, so currently the EPS is at around 23.88, and assuming a 10% growth over the next 5 years or so, which I think is extremely possible, Because for United Health over here, they've guided that they want a 13 to 16% EPS growth over the next few years. That's their long-term target. But I don't think they'll be able to achieve that anytime soon. Maybe a 10% is reasonable. And assuming a 20 times earnings for this company is now around a 12% CAGR. So of course, this company comes with risk because it is not in like a win-win situation with its customers. But I think at today's price today, United Health is a worthy investment, and that's why I've added a very small position on my portfolio. Hopefully it comes out of this situation soon. Next portion I'll be talking about is Google's antitrust lawsuit. So Google has basically been sued again. So US judge finds Google holds illegal online ad tech monopolies, and they're requesting for Google to sell the Chrome. So DOJ, they were saying last year, and they're emphasizing again that they want Google to sell their Chrome business. And for Google over here, I think if they were to sell their Chrome business, that is the end of the company, because everything functions on Chrome. So without Chrome, I think Google cannot function. I think the DOJ is expecting too much over here. The DOJ request is too drastic, and I don't expect the judge to force Google to divest Chrome. With that being said, what exactly can a judge do? So Google over here has basically offered to sell part of their edtech business, but it's not enough for the EU publishers. So Google over here, they were sued by EU as well, and they are forced to sell this edX marketplace over here. So what exactly is this edX marketplace? It is a marketplace where all your different publishers, they will basically bid for ads. So for Google, if they were to sell this edtech portion of their business, I don't think the impact will be as substantial as selling Chrome. So I think Google over here, it is a company that is hit with a lot of bad news, trading at a very good valuation right now. If you're willing to take the risk of the company not splitting up, then it is a very worthy investment right now. I hold the perspective that even if Google splits up, that is actually shareholder accretive, because Google has many portions of their business that are high quality. So for example, YouTube is an extremely high quality business. Same for Google Cloud, same for Waymo as well. Those portions can split up, and you will likely get outsized returns as compared to holding Google as one piece today. Next portion, let's look at the stock market outlook. So the stock market over here is up around 0.6%, and I've drawn a trend line over here. So this is the downward trend, and the stock market is still making sort of like a lower high. So the stock market hasn't broken up above this high yet, and before it breaks above this high, this cannot be confirmed as a rebound. So the stock market has to hold this 5126 line in order for this rebound to remain. And if the stock market breaks below this 5126, then we will likely retest the low again at 4840. So these two lines are the important ones. If this line is broken, then we'll likely go down to this line. We could test this resistance as well, and if we break above it, then likely the rebound is already confirmed. So let's see where the stock market goes. No one knows exactly what is going on. No one knows how impactful all these tariffs will have. But yeah, I'm just buying on the way down. I'm buying as high quality companies like Google, Amazon come into play, and let's see where these companies are in 5 years' time. Last portion I'll be talking about is some high quality businesses that are trading at reasonable valuations. So the first company over here is Novo Nordisk. Novo Nordisk is down today because another company, Eli Lilly, they basically released a drug that's comparable to Novo Nordisk in terms of efficiency. So Novo Nordisk is a company that's trading at 18 times earnings, and I remember around a few months ago, maybe about a year ago, this company was trading at around 30 times earnings at around $140. So the company has shaved off around 66% of its market cap already, and it's currently trading at around 18 times earnings. So for this company over here, what it does is it sells your Ozempic drug. So you have their Ozempic as well as Wegovy and all your different other weight loss alternatives as well. So for United Health over here is a company that is growing revenue at around 25%, 26%, 31%, and this company grew net income by 20% last year. So I think for Novo Nordisk over here, if you are someone who is able to understand the entire pharmaceutical industry in terms of the weight loss drug, then I think Novo Nordisk could be a very good buy entry. Novo Nordisk is a company that is trading at a massive discount right now. I have the intrinsic value at around $80. So this stock right now is around $60. That is around 25% margin of safety over here. But for me, I'm not touching Novo Nordisk simply because I don't understand the industry enough. I don't understand the business. I don't understand the patent expiry and all that as well. So they have the patent expiry for their Wegovy and Ozempic. That will be coming in 2031, and I don't know how the dynamic will change after the patents expire for Wegovy and Ozempic. They have another drug coming up as well, which is Rybelsus. I don't know how effective that drug will be because it is still currently in phase 3. It is not in phase 4, phase 5 yet. And that's why I'm not investing in this business. Maybe if it drops around $40 where it becomes ridiculously cheap, then I might buy into this business. But for now, I'm staying out of this. As long as you can understand this business, I think this business is a quality one that you can add into. Next company is PayPal. So PayPal over here is a company that's trading at 15 times earnings, 12 times forward earnings, and I've seen a lot of messages on PayPal already. So for PayPal over here, the problem with this business is the business is slowing down. That's one. They have too much competition in the space. So you have other alternatives like Wise, Stripe, Visa, MasterCard, Apple Pay to an extent as well, and all your different other local payment networks as well. So for example, in Singapore, there's PayPal, PayNow, and then I believe in China, there's WeChat and all that as well. I don't think they use PayPal as much as they use all the other apps over here. But yeah, for PayPal over here, it is a company that is trading at 15 times earnings. I think if you're buying the stock today, in 5 years' time, you will likely get an outsized returns. You will likely get maybe a market matching or market beating returns. But for me, I'm not looking to buy into PayPal as well, simply because the moat is not there. Because for this company over here, it faces too much competition, as I said previously. And for me, I think I would rather buy a company like Visa, MasterCard. Those two companies are much higher quality businesses, although they are trading at much higher valuation. I'm not one to sacrifice quality for valuation, and that's why I'm not looking to buy PayPal. So for PayPal over here, I believe they're buying back a lot of their shares, so you can expect an EPS growth of upwards of 10%. And so for 10% EPS growth for 15 times earnings, I think you won't go wrong with this investment. But for me, it's simply a company that I wouldn't be adding today. I hope you guys have found this one useful and invest safe.